Hi traders, and welcome back to yet another new video from CNF Trading. This video is very unique as I'm going to explain a scalping strategy that I myself use on a daily basis. This is a scalping strategy that you can execute on the 1-minute time frame and with which you can make very large profits. Let's start right away. Before this video starts, I have a good news for you guys. I have created a Telegram VIP signals channel. First 200 members can join it for free, so make sure to join it fast so you can make huge profits with us. You can join it via the link below the description. For this scalping strategy, we will not use any indicator. We are purely going to watch the price action movements of a price and act on them. I personally trade this scalping strategy mainly on the price of Bitcoin, since with this strategy we want to trade in an asset that has a lot of volatility. For this scalping strategy, we are simply going to look at the highs and lows of a price and then use the Fibonacci retracement. For example, if you look at this price movement, you will see that the price makes higher highs and higher lows. We always use the last higher high and low we see, so if we look at this example, this is the last low and this is the last high. Once we have found a high and low, we pull out the Fibonacci retracement tool from the low to the high, then we drag it to the right until the Fibonacci covers the entire price. First, it is important to know what settings I have on the Fibonacci. Double-click on the Fibonacci and enter the same settings I have. Well, when you have done that, you will see that there is a green line moving below and a green line moving above. These are our buy and sell targets. Let's start with the bottom green line, which is our buy target. This is because once we have seen a high and a low, and then drawn out the Fibonacci, we are waiting for price to fall toward the lower green line. So we want the price to hit the lower green line. There we wait for the first green candle before buying it. If we zoom in for a moment, you can see that this is the first green candle. Exactly at that point, I'll open my buy position. Next, we'll see another white line at the bottom of the Fibonacci. This white line equals the last low. Below this line, we set our stop loss. Next, we place our take profit target to the top green line. As you can see, we have a very high risk-reward ratio. Now let's see what this position would have done. As you can see, the lower blue line was the perfect time on the buy and the upper blue line was the perfect time to sell. Let's look at another example. In this example again, we see a low point and a high point. So we can draw out the Fibonacci retracement tool. We start at the bottom and drag the tool up to the high point, and then we drag it to the right. At that point, we are going to wait until the price drops to the bottom green line, and when the price has touched this line, we wait for the first green candle before opening a buy position. The first green candle takes place here, so at this point, we open our buy position. We set the stop loss below the lower white line, then we set the take profit target on the upper green line. The beauty of this strategy is that you never know in advance how big your positions will be. Now let's see how this position closes. As you can see, the price rise started exactly on the bottom green line and stopped exactly on the top green line. So again, this was really a sniper entry and exit. What platform I open buy and sell positions on it is on Bybit. On this cryptocurrency exchange, you can easily open buy and sell positions with or without leverage and over 150 cryptos, and you can use 100x leverage. It means you can make your profit 100 times faster, but of course you will lose 100 times faster too. I myself use this exchange for my daily trading, and I do so because it is a reliable platform and I can use a 4-price layout. If you also want to trade on this exchange, you can visit Bybit via the link below this video. Bybit also has a $4,000 sign-up bonus and many more gifts, so that's definitely interesting as well. Of course, you can also trade this strategy in a falling market. Then the Fibonacci retracement is simply reversed. In a falling market, we obviously first want to see a falling market and thus lower lows and lower highs. As soon as we see a new lower low and lower high, we can draw out the Fibonacci. This time we start at the last high and end at the last low. Then we wait until the price returns to the upper green line, after which we want to see a red candle. As soon as that red candle occurs, we can open a short position. You see there is a red candle here, so I open my position there. I now put my stop loss above the upper white line and I place my take profit to the lower green line. Now let's see what this short position would have done. As you can see, this was another sniper entry, and a very good exit with a very large profit. Now I will give you a tip for this strategy. It can be difficult for some traders to determine whether a price is moving in a falling or rising market. As a result, they can often open incorrect positions. But there's a simple solution to that. You can add the indicator EMA. This is short form for moving average exponential. Once you have added it, go to the settings and change the length to 100. Then you can easily see if the price is moving in a falling market or just in a rising market. Now if we look at the long position we just opened, you can see that this would indeed have been a long position because the price generally moved above 100 EMA. So when the price moves above 100 EMA, you only open long position. In contrast, if the price moves just below the 100 EMA, you open only short positions. This way you can easily distinguish the falling market from the rising market and vice versa. I hope you will backtest this strategy because this is seriously a very good strategy that I have been implementing myself for years. I want to thank you for watching the video and I look forward to seeing you again in the next one.